How's it going, everybody? It's Stas here, and in today's video, we're going to be talking about and breaking down the top stocks and the top ETFs that I'm watching and that I'm looking to trade heading into this week in the stock market. And like you all read in the title, I also want to go over what the stock market futures are looking like right now when it comes to the NASDAQ, the S&P, and the Dow Jones. And I also want to go over a bunch of companies that are reporting earnings this upcoming week. And mind you guys, earnings season is fully upon us, so a lot of the big boys, a lot of the big companies are going to start reporting earnings, and with the CV going on, the global crisis, economy shut down, these numbers are going to be very important to keep an eye on and to track. And before we do get into everything, all I ask from you guys, as always, is if you enjoyed the content, hit that like button down below and consider subscribing to the channel, and feel free to join our Discord chat and our Facebook group, link down below in the description. Those platforms are 100% free to join. So before we talk about the futures, before we talk about what stocks, what ETFs I'm watching and looking to trade, let's break down what the S&P did in these past couple of days, actually these past 5 days, this past week of trading. And as you guys can see, the S&P did pretty well. We hit a low at 2720 on Monday, last Monday, the 13th of April, and we ended up closing the week on a pretty solid upswing. And once we pull back to the larger time frame, you'll see we closed right at a critical point on the S&P 500. And the move from 2720 up to about 2880, it was a move of about 5%. So that is kind of what the S&P swung last week, which, again, it's pretty incredible. Like I've been saying in these videos, the swings that we're seeing in the markets these days, and mind you guys, these aren't normal swings whatsoever, but due to the circumstances that we're in, these swings are kind of warranted, right? Because the markets, they move heavily with human emotion, with all of these catalysts that we have at this point. So it does make sense that the market is moving pretty crazily. And going to that larger time frame, like I said a minute ago, we can see the S&P closed right at 2875, which puts it right under the major moving average here on the 4-hour chart, being around 2,900, and that moving average is the 180 SMA, and it's actually putting us right under an old support, which was at around 2870 to about 2880. And obviously, as we break supports, they become resistances. And since we broke that level at 2860 about a month ago at this point, it became a resistance. So for this upcoming week, the S&P, it's going to be interesting to see what happens, guys. This level, 2,900, 2,880, is a very tough level, I'd say, for the bulls at this point. The bulls need to take over this point for the markets, obviously, to continue rallying up. And when it comes to the futures, the E-mini S&P Index futures, they're down at this point almost 1%, down about $24 right now. The NASDAQ is down about $60, down 0.7% roughly, and the Dow Jones is down about 210 points, down almost 0.9%. So these moves aren't too crazy, honestly. And considering the markets did very well on Friday, the S&P up 75 points, NASDAQ up about 75 points, and mind you, the NASDAQ did lag a bit on Friday. The Dow up about 700 points. You know, us down a bit in terms of the futures, it's kind of not too crazy because we had such a strong day on Friday. So for tomorrow, guys, when it comes to the overall markets, obviously, I'm going to be looking at the futures and the large cap stocks heading into the morning, right? If this futures market ends up holding red into the open, we may experience maybe not a full-on red day tomorrow because we can't really predict that based off of futures, but we might experience a little red in the morning. Maybe the first hour, 2 hours of trading, it might be a bit bloody, and from there, we'll see what direction the S&P, the Dow, the NASDAQ picks. But as of now, the futures are red, and that's kind of what I'm looking for, heading into tomorrow. And of course, like always, keep an eye on the large caps, guys. That is big. And when it comes to a bunch of stocks that I'm watching, ETFs that I'm watching, let's just get right into it. And if you guys feel free anytime during the video, drop a comment. Let me know your thoughts on the market, your thoughts on different stocks, and any ETF stocks that you're looking to trade and that you are watching right now. And guys, when it comes to earnings, a lot of big companies. Like I said, this week we have Netflix, we have Coca-Cola, we have Domino's Pizza, we have AT&T and Verizon. I'd say those are the 5 biggest names to keep an eye out for. And the biggest out of the bunch, I'd say, is Netflix, guys. Netflix has just been on an absolute tear. Netflix and Amazon, actually, these two have been the hottest stocks in the stock market. Looking at their charts, you'd think we're in the peak of the bull market. Everything sunshine, rainbows, everybody's blowing $100,000 at the casino, money's great. That's what you'd think, right? If you're looking at Netflix stock, Amazon stock, these companies are on a tear. And mind you, Amazon's actually reporting earnings on the 30th of this month. So I'm interested, what are these companies going to be reporting, as many people are ordering a lot more goods from Amazon. They're watching a lot more on Netflix now that everybody's quarantined. At least that's kind of a speculation that I've made, and many of you guys would agree with that. So I want to see if these numbers end up backing up that speculation. Are we going to get a spike in the users of the service, the revenues? Are they going to spike our profits? What's it going to be looking like? That's what I'm watching for Netflix. And technically speaking here, Netflix is actually at a decent spot. We hit an all-time high 450. We cooled off a bit on Friday. Again, like I said, the NASDAQ lagged a bit on Friday because of Netflix and Amazon and Apple doing poorly on Friday. And that put us at 420, which, if you guys take a look on the yearly chart, actually the 3-year chart will do the deed here. You'll see 420 is generally that old all-time high that we had back in July of 2018. So the goal here, what I'm looking for, is to see if Netflix holds 420 and maybe we rally back to the 450s on a solid earnings report. And for me, guys, I haven't said this recently on the channel, but I always say it around earnings periods. I don't gamble on earnings plays. I don't buy a stock before earnings hoping that it goes up after earnings. I'm the type of person that waits until earnings are posted, EPS, revenue, all of the guidance, all of that stuff, and then I take a look at maybe hopping into a position. And that's what I do 99% of the time, because trust me, I've gambled in the past, guys, buying stocks before earnings. Sometimes, yeah, you'll hit a jackpot. You'll hit a nice 15% move, 10% move. If you bought call options, you'll probably get a nice 200-300% gain. But if you don't get it right, which happens a lot of the time as well, you'll lose 10%, 15%, you'll lose 100% on put options, call options, whatever it may be. So be very, very careful. That's all I have to say about trading around earnings periods, because the truth is, nobody knows what these companies are going to be reporting unless you're into insider trading, which if you don't like prison, I wouldn't get into insider trading, guys. Let's just put it that way. So a lot of other companies that are reporting this week are the airline stocks. Last week, we had a bunch of banking names. JP Morgan, I think Goldman Sachs reported, Bank of America. This week, airlines. We have UAL, United Airlines. They're reporting, I believe, tomorrow, possibly. No, that's completely wrong. They're actually reporting on the 28th. I don't know why I put them on my list for this week. But either way, the airline stocks are still worth watching. JetBlue, They're also reporting earnings tomorrow, or actually on Tuesday, the 21st. Delta Airlines, arguably the most attractive airline company, they're reporting earnings this week as well. Let's take a look here on the 22nd of April. Save, which is Spirit Airlines, a budget airlines here, they are reporting earnings this week as well, just like Southwest Airlines, ticker symbol LUV. So in this video, guys, we're not jumping into what these projected numbers are going to be. That would take too long, but the goal is for you to write down these companies and keep an eye on them throughout the week to see what they report when it comes to earnings, so we can see kind of what the strength of the overall economy is here in the United States, because that's kind of what you gauge based off of these major companies' earnings, especially airline companies. I'm looking to see kind of what type of money are they making now based on people not really flying during the CV and everything going on. And out of the companies that are reporting, guys, just being kind of just guessing at this point, out of Netflix, Coca-Cola, Domino's, AT&T, Verizon, all the airlines we just mentioned, I'd think that Coca-Cola and Netflix, just trying to put a prediction here, speculation, I'd think they'd do the best, and really because Coke is an essential product, not really essential, but it's a product that people use and people buy no matter what time period we're in, and of course Netflix with the whole CV, I think they're going to do well, but when it comes to the airlines on the flip side, they're not going to do too well for obvious reasons. And a bunch of other stocks I'm watching here, guys. Let's break down some charts. Apple, ticker symbol AAPL. Take a look at the price action from Friday. Like I said earlier, this stock did poorly. Amazon and Netflix did poorly on Friday as well. But notice how Apple closed at a very critical level of support at around $280 to about $282. This was actually a resistance back in, what month was this here? Back in December of 2019, before we rallied all the way up to 330, and 280 back on the 14th of April, making it a support again. And I think, guys, if we hold this and the markets end up rallying green, which at this point they are still red when it comes to the futures, but let's say we do end up holding 280, or worst comes to worst, we fill the gap down to 270 and we hold 270, either one of those could be a potential dip buy, right? Depending on what the overall markets are doing, because you have to realize big trillion-dollar companies like Apple, when the markets dump, typically Apple is dumping as well, and honestly, Apple would cause the markets to dump due to it being a massive portion of the markets when we're taking a look at the S&P 500, right? So either way, 280, 270, I think Apple could be a decent entry here for a short-term trade, maybe back up to $300, $290, $295, especially if we get more positive news this week surrounding the economy reopening, surrounding more treatments for the CV, more stimulus, more small business loans, etc. This positive short-term news, it could end up helping a company like Apple. And another one here that I'm watching is Space, ticker symbol SPCE, also known as Virgin Galactic. And this stock has been all over the place recently. We were at $12 back in the beginning of the month, shot up all the way to $21, down to $17. Now we closed up almost to $19 on this past Friday. And what I'm personally seeing here on Virgin Galactic is a head and shoulder pattern, right? You guys can clearly see it here. On the 14th, we made that left shoulder heading into the 15th. We made the head heading into the 16th of April. And with Friday's kind of a bearish day, I'd say there, because we failed to break out of this 50 simple moving average, that was the formation of the right shoulder, right? So at this point, I could definitely see Space, SPCE, moving down and retesting 1750, 17-ish dollars. And if it breaks that, we might be going back to $16. So this could be a short play. And honestly, guys, if we pop above this 50 SMA, we pop above $19 and maybe try to fill the gap up to $20.50-ish cents, $21, that could be a long play. So we really have to see kind of which direction it picks. And I have a feeling we're going to see either a big gap up or a big gap down in Virgin Galactic tomorrow. That's typically how the stock moves. Very volatile, very up and down. And whether it gaps up or gaps down tomorrow, that's kind of going to be the sign that we need before either going short or going long. We're going to see. We just have to wait what direction kind of it picks in tomorrow's pre-market session. So another one is MasterCard, ticker symbol MA. MasterCard has slowly been descending in price over these past couple of days as the market has been heating up, which is pretty interesting, right? MasterCard went from 282 on the 7th of April. Now it closed at $260-ish this past Friday, putting it in an interesting spot. You guys can see we're kind of in a wedge at this point. We closed under a major resistance at $260 to the point where I'm thinking if we break this downtrend, we break the resistance here on this wedge and the 180 SMA on this 30-minute chart, we might be able to fill the gap up in the short term to 270. So 260 to 270, this is the window that I'm looking for MasterCard to make a nice profit. And I think if the markets turn around tomorrow, which is very possible with the Fed pumping in all of the stimulus, right? People say, don't fight the Fed, right? With that possibility, that real possibility of the markets rebounding this week, again, we could see MasterCard fill the gap up to 270. In my personal opinion, no problem. And another stock that, honestly, guys, I'm not going to be chasing it here, but still worth watching is Shopify. Ticker symbol SHOP. This was up a whopping 12%, guys. $64 on Friday. Just when you thought this thing is going to stop, it's going to cool off, there's no way, the stock goes up even more. Just a couple days ago, it was at $344. And what did I tell you guys before this whole crash, before everything? And you guys know this, most of you guys know this, whenever a market sees a big downturn, what happens to a lot of these growth stocks? A lot of the growth stocks, they get pulverized. They get crushed, right? They lose 50%, 60%, 70%. And the value stocks like Coca-Cola, PG, J&J, they don't get pulverized as badly. They go down maybe 20%, 15%, 10%. But when the rebound occurs, they don't rebound as quick, right? They go down 20%, they might rebound 10%, but a stock like Shopify, which is a growth stock that goes down 70%, it could rebound back 100%. It could rebound back 150%, 80%, 50% in the snap of a finger. And that's kind of what we're seeing with a lot of these stocks, Shopify being one of them, which, guys, in the past couple of weeks, it's gone from nearly $340 per share. It was in the middle of March at $315. It's doubled. It went from $315 almost to $600, which is not completely a double, guys, I know, but it's almost at a point of doubling. Let's put it at 90% gain, which is still ridiculous. And another company like that is Uber. Uber's a growth beast here, a growth company that got cut in half and some as we got the bad news about the CV. This stock went from $40 down to $13, guys. Come on. This is insane. But now on the rebound, it went from $13 now back to almost $30 per share. And this well over 100%. This well over doubled when it comes to Uber. And that's incredible. And in the short term here, I actually see more potential in a stock like Uber, let's say, than Shopify, because Uber still has a move up to, let's say, $30.75. That's the next resistance I could see. And from there, maybe $35. That's a little bit farther, from where we are now, but I'm just giving you guys some perspective. So for this week, when it comes to Uber, it's clear what's happening. We're trading in a horizontal channel between $25, $26 to about $28. And it's been like that pretty much this whole month of April. And actually for a piece of the month of March, towards the end of the month of March, it was like that. So whether we break 25 to the downside or 28 to the upside, I'm looking to either go long or short on Uber. And my personal opinion, guys, in the short term at least, I could see this thing filling the gap up to $30, $30.50, this next zone right here. So that's kind of what I'm watching for Uber. But let's say the markets turn sour. Let's say the S&P does hit 2,900 and takes a massive dump. Like I said earlier, that's possible. We might see Uber fall below 25, and then it could be a fantastic short position from there. But either way, we're going to have to play it by ear, be safe, and just kind of be conservative and patient. That's the word. Patience in this time period is absolutely key. And another stock that I'm watching, the next one here, is CCL. Kind of like Uber, it's been trending in this horizontal channel from about $13.70 on the top side, bottom side being around $11.50. So I'm thinking in the short term, CCL, for me at least, needs to break $13.70, $14-ish, right around there, for me to even consider going long in the short term, on CCL. I think from $14 up to about $16, as you guys can see here on my chart, I think that's very possible. We did it a couple weeks ago, back towards the end of March, and I think if the Bulls win $14, they can easily push us back into the 16s, 15s. So that's kind of what I'm watching there for CCL. And another one that has been doing decently well, pretty well, is Caterpillar, ticker symbol CAT. And you guys can see we actually hit $130 per share just a couple days ago on Caterpillar. Pulled down to about 112. We held 112 heading into the week close of the week last week, which is strong. Now, for me to enter into Caterpillar, I'd love to see a break back into the 120s. I think in the 120s, Caterpillar has more potential to go back to the 130 level. And the thing is, why I'm being more patient about it is this could be a head and shoulder forming, right? You guys see it, left shoulder, head, and the right shoulder could be forming here if we fail at about 115, 117, this general area. If we fail there, and especially if we break 113 on the downside, I could see a lot more downside at that point from Caterpillar. And overall, from a bullish perspective, I need it into 120 to even consider, trading it. Now that we talked about a bunch of stocks, let's go over kind of what gold is doing, crude oil, in terms of their futures, and then we'll talk about kind of what I'm looking at when it comes to those two. So gold at this point is seeing quite an aggressive sell-off, and it's honestly warranted in my opinion, because this ran up so darn quickly. We went from $14.50 under 3 weeks ago, about actually more like a month ago at this point. We were at $14.50. We rallied up to $1,700 in about 3 to 4 weeks. We're bound to see a pull down. Mind you, it was actually almost $1,800 in about 3 to 4 weeks. So we're bound to see a pull down. And in general, you guys can see the 1690, 1700 territory. It's pretty major for gold futures here due to this being an old resistance from a couple months ago, back in February, back in March, towards the end of March as well. So this is an area that, being a bull for gold, on gold, I'm bullish. I would love to see it hold 1690, 1700, at least in the short term, from a technical perspective. And some gold stocks that I watch are GDX. GDX is a gold miners ETF, a bunch of miners here. GLD, if you're looking to play a more pure play on gold and just track the price of gold with an ETF, GLD is the way to go. It tracks the price of gold. So let's say you don't own physical gold and you want more exposure to it, GLD could be a great option for you. And when it comes to crude oil, guys, crude oil at this point is down about 2%, down $0.50 here. And we're seeing a bit of resistance on this 4-hour 180 SMA here. As we talked about last week, we talked about how this is going to be a sticking point for crude oil, as it did fail to break out of it earlier this month, as we did see that surge. I believe this is when we got more positive news around oil, or when Trump came out and tweeted something. I think that's what caused this massive pop in oil. But you can see we failed there, and we tested another low. So at this point, are we going to test $19 again? Maybe get into $17, $18 a barrel for crude oil? That's kind of what I'm looking for, and kind of what the technicals are pointing towards, at least right now. And of course, everything can change overnight. We've seen it happen. So that's why I always analyze the futures throughout the night and into the morning. And I made a joke the other week, guys. I set an alarm every hour to check the futures, and maybe I'm not joking about that. What do you guys think down below? Do you think I set an alarm every hour to check the futures? I would love to know what you guys have to think about that. So overall, we talked about pretty much everything, the top stocks, the top ETFs that I'm watching. And before we wrap the video up, market ETFs. If the markets get rocky, you guys know I like trading SPXS, SPXL. Those are an ETF, an inverse ETF duo that track the S&P. So let's say, for example, the S&P goes up one day. You can trade SPXL, which is a leveraged ETF that gives you 3 times the return that the S&P gives you in a given day. And mind you, this is not a long-term investment. It's a day trading vehicle. And SPXS is the same thing, but on the short side. Let's say the S&P goes down 1% one day, SPXS is going to be up 3%. And when it comes to volatility, guys, when I want to trade the pure markets, this is what I'm looking at. SPXS, SPXL, and TQQQ and SQQQ, which is another combo that tracks the NASDAQ. So we'll leave it at that, guys. If you enjoyed the video, hit that like button for me and consider subscribing to the channel. And let me know down below in the comments, what are your thoughts on the market? What stocks, what ETFs are you watching? Are you buying anything? Are you selling anything? I would love to know. And if you guys actually want 2 free stocks from Webull valued up to $1,400, you can actually use my affiliate link linked down below in the description box. All you have to do is put in $100 and you'll get those 2 free stocks, with one of them valued up to $1,400. And that does support me and supports the channel in general and all the free content that I'm putting up here on YouTube. And I do appreciate you guys if you do use that link. So I'll catch you all in the next video. Stay safe out there. As always, guys, peace out. How's it going, everybody?